Good morning, all. Again, this is Dave Whalen with American Independent Marketing. Joining me today is Paul Gonzalez, our internal wholesaler with American General. We'll begin here shortly. Just wanted to run through a couple of commercials. Upcoming webinars. Thanks again for joining us today. Coming up this Thursday, we have a special session kicking off Long-Term Care Awareness Month coming up in November, so keep an eye out for an invitation for that webinar as well. And on Friday, we're doing a webinar on United Healthcare's Medicare Supplement in preparation of the AEP starting up on the 15th. A week from today, Paul will be back with us again, walking through the ins and outs of the GAP policy for personal accident. It's also available with the critical illness rider as well. Things that are happening here at American Independent Marketing, we've got a heck of a lead program built together with target leads. For all different facets of insurances, particular MedSup and long-term care, and CI and final expense. They are giving a discount to American Independent Marketing agents, $85 off the rack rate per 1,000. And then to back that up, we're putting our mouth where our words are as well. If you're willing to make an investment in your own practice, we're willing to make an investment in your practice as well. So as you sell policies through us, upon taking advantage of the lead program, we will reimburse you for ongoing mail drops ranging from $25 per Medicare supplement application up to $100 per app for a long-term care app, $75 for critical illness, $50 for final expense. So we're willing to make an investment in your practice if you're willing to make an investment in your own practice as well. We do have our Mutual of Omaha TV giveaway program underway. It runs now through the end of the year. A chance to win anywhere from a 40-inch up to a drawing for an 80-inch curved Samsung high-definition TV as well. So just a few things that are happening here at American Independent Marketing. We sincerely appreciate the fact you're taking about a half hour to 40 minutes out of your day to join us today. Again, joining me is Paul Gonzalez, our internal wholesaler with American General / AIG. And with that, Paul, I'll pass it over to you and lead us down the path.
All right, thanks, Dave, and I appreciate you giving me the opportunity today. For those who are familiar with American General, you'll probably know us more specifically for our life insurance portfolio. American General has been in the life insurance business for quite some time. We're part of the larger family of the AIG family of companies. A lot of our branding, as you'll see, will on a go-forward basis will be promoting the AIG brand a lot more than the American General brand. But just for those of you who are aware, if you're already appointed with American General through AIM, you do have access to not only their life insurance portfolio and their annuity portfolio, but also the accident health plans, specifically the ones we'll be talking about today and next week, Critical Care Plus, and then the accident plans, whether you're in, depending on which state you're selling, Emergency Care Plus, Accident Expense Plus, or Accident Choice Plus. Today we're going to be talking about Critical Care Plus, and one of the things we want to do is we don't want to get too deep in a dive into the product specifics. There will be a few things that I'll highlight just to make sure you're aware of the differences between our product and other critical illness products that are out there. But we want to spend the majority of the time talking about the why. Critical illness insurance has been around for several years. My background personally, I was a financial advisor for some time. Selling primarily mutual funds, fixed annuities, and variable annuities. I moved over to wholesaling fixed annuity products with American General, and then was given the opportunity to wholesale their accident health portfolio. And at the time, it was a difficult transition because typically when you're an advisor out there, you find your lane and you kind of stick to it. You know your stories that you want to tell, whether it's the planning for retirement as a financial advisor, or whether it's protecting your loved ones as a life insurance seller or a long-term care seller, or if you're selling major medical insurance. You all kind of find your lane, and you kind of find your comfort zone, and you become an expert at that. Even though you have the opportunity and the access to a lot of other products and a lot of other stories. When I came over from the annuity side, one of the things I realized right away was, if you put a plan together for an individual, all these products all fit together in some form or fashion. And really the important thing is just to understand why you're presenting it to the customer, making sure that you have the confidence to tell the story, but also to make them understand that, regardless of what the name of the product is, you're trying to accomplish the same thing. You're trying to help them to get somewhere financially while protecting them along the way. And critical illness insurance is a protection plan just like life insurance is. It's putting money in the hands of the insured at a time when their finances can be disrupted by the situation that's occurring. And with that, we're going to go ahead and get started with the presentation. You know, as many of us are aware, healthcare has been a top-of-mind conversation as of late with the Affordable Care Act going into place. The first open enrollments last year for the for what's been deemed Obamacare out there. The nationalized health care, basically. It's no longer a conversation that is strange for a life insurance agent to bring up with their customer or financial advisor or just neighbors. Everybody's talking about health care. Everybody's aware that health care is now something that they have to have, whether they go through the public exchange, the private exchange, whether they qualify for a stipend or not. That's all in the air. But at least the conversation is there, which makes it a little bit easier for those of you who maybe were a little bit hesitant to bring up health care at all because it's not your forte or it's not your main focus of your business. The general conversation can be had. And because of that, you can now open up new opportunities by starting these conversations about their fears about health care, their understanding of what's going on out there, their needs around their health care, but more importantly, what else can they do to protect themselves in the event of a major medical situation. Critical illness insurance can give your clients peace of mind by providing funds for what's best for their health and help them preserve their wealth. And I think those two things are very key to the reasons why you're selling critical illness. What's best for their health, meaning giving them the opportunity to seek out whatever care is necessary to make sure that they're cured from these diseases, and to preserve their wealth, meaning you're putting cash in their pockets to protect their family when a lot of their money is going to have to be redirected to paying medical expenses, missed time from work, finding additional care for the household, etc. Having an infusion of dollars, a lump sum payment of dollars into their pocket will help them preserve their wealth and continue to make sure that they have financial stability throughout the crisis. It can be used in small business situations, which is another very underserved opportunity, and we'll talk about target markets later on. But a lot of people talk about how to protect a small business against an untimely death. A lot of people have exit plans on ways to do stock plans. Very few think about what happens if somebody is to get sick while they're on the job, and how that business is going to get a lump sum of cash to keep the business afloat while that person recovers. One of the things you'll hear me talk about a lot, and you'll hear AIG talk about a lot when we talk about our products in general, whether it's a annuity plan, an insurance plan, or a health plan, we're all talking about the key components of an overall financial plan. Our life insurance division does a great job of protecting families in the event of an untimely death, whether that is a protection against the payments of mortgages that are out there, putting kids through college, transferring wealth in a tax favorable way. But what we do know is in today's environment, a lot of things that used to kill us, we actually survive. There's tremendous breakthroughs every day in medical technology and in medicine in general that allow us to survive from things like heart attacks, cancers, and strokes, all things that in the past would trigger a death that would trigger a life insurance claim. People are living longer, and anybody who's in the long-term care business understands people are living longer, and you have to protect against the length of time that people can be alive but still be sick. And there always has to be a plan in place for what we're going to do in the event we live a little bit too long, whether it's retirement savings or long-term care planning. And we've all seen these stats before. I'm not a big guy on memorizing stats for the sake of point-of-sale conversation, but I am a big believer in talking about stats when we're talking to agents, because we really need to understand why it's important for us to have these conversations in the first place. And I think these two stats on the board, whether it's the amount of people that are going to live, beyond age 65, or the 50% chance at least one spouse will live to 94. These are all things we've heard in the past, but they're important to know and important to soak in, because this gives us an understanding as to why it's important for us to present these products to all of our customers and finding the amount of coverage that's necessary for them in particular to protect them against these situations. A couple of other stats, 83.6 million Americans are living with cardiovascular diseases. 75% of people who suffer a heart attack survive at least 3 years. About 6.8 million Americans over age 20 had a stroke. And 70% of people who suffer a stroke survive at least 3 years. And that, suffering percentages are pretty high. Those millions and millions who have suffered these situations are pretty high. It's that recovery and that survival for 3 years that a lot of people aren't planning for. And that's where, you might have a major medical plan in place that helps to cover some of the expenses, but there are a lot of expenses that aren't covered by that major medical plan. Some additional stats: between 50% and 70% of stroke survivors regain functional independence, but 15 to 30% are permanently disabled, and 20% are going to require care in an institution for at least 3 months after onset. In 2013, 1.66 million Americans were expected to be diagnosed with cancer. So we're talking about 1.6 million people who would benefit from having a critical illness plan had somebody presented that plan in place. And this is just in the stats from 2013. 68% were expected to survive at least 5 years. Again, the key is the amount of people who are being diagnosed with these conditions, and then the amount of people who are surviving for a number of years beyond that. What are the financial ramifications of them not having a plan in place to have some additional funds in their pocket in the event they were diagnosed with one of these conditions? And the average out-of-pocket cost for cancer patients is $1,266 per month. Again, these are all statistics that we share with people, and at the point of sale, as a salesman myself and somebody who tried to do this in the past, when you talk to somebody about certain products, if you say 50% of the time this happens, the individual is going to automatically assume, well, I'll be the 50%, but that's not going to happen. So I don't share stats as a reason to point out to a customer why it's important. I just really think it's about putting a framework around your mind as to why it's important for these products to be in place in your customers, especially those who you built relationships with over the past. If you haven't had conversations about critical illness insurance at this point, it's a great opportunity to go back to them and talk about it. We keep talking about the what if they don't die, and the reason why we do that is because, like I said before, we do a great job at American General and at AIG about protecting families in the event of an untimely death. But we have to do a better job as a company and as an industry overall to protect people who are surviving. What people don't understand is when they survive, there's still a lot of things that have to be done. The main thing is they'll have to direct some of their monies that they had planned to use to save for retirement or pay their life insurance premiums. And I think this is huge. If you've sold somebody a life insurance policy, if you're their financial advisor, how good is it for you as the advisor to put money in their pocket so that they can continue to pay their premiums on their life insurance or continue to save for retirement and use the lump sum to pay for the cost of the care that they're getting or pay for the cost of any lost income. So this is an opportunity for you not only to protect the customer, but to protect yourself as the agent as well. And beyond that, if they lapse their life insurance policy, what's the likelihood of them being able to qualify for life insurance again if they've been diagnosed with invasive cancer, heart attack, or stroke? The possibilities are slim to none. So by having this plan in place, not only are they getting cash to take care of the direct costs of the services that they're receiving for the cost of the care, but they're also having dollars available so that they don't have to redirect the funds and let things like their life insurance policy lapse, which ruins their plan for any transfer of wealth or protection of any other family members in the event of a death at some point in the future. So what we're really trying to say is are we protecting our customers enough? Do they have all the protection that they know they can afford? And are they even aware that they have the ability to protect themselves with another solution like critical illness insurance? And I think this is really the story that when you walk away today, look at your book of business and think about the amount of people that you have out there who have this hole in their financial plan, who aren't out there protecting themselves in the event of a diagnosis of one of these conditions, because that lump sum can make a huge difference in the way they are able to go forward from that, not only from the actual situation of the diagnosis of the critical illness, and not only from the care that they can receive, but also from their future financial planning on a go-forward basis. your clients need to be aware of a lot of things. One of them is if they become seriously ill, they're going to have a lot of out-of-pocket liabilities. And we'll talk about some of those direct and indirect costs more specifically. But whether they have a major medical plan in place or not, they're not really going to know what their exposure is until they have that. What their deductibles are, co-pays, et cetera. They are going to have some out-of-pocket liabilities when they get diagnosed with one of these conditions and need the care that is needed in order to get them through from diagnosis to recovery. The medical networks that the clients are getting these days are getting smaller and smaller, which means their options are limited as far as what their major medical plan is going to cover. Wouldn't it be nice to have the opportunity to make a choice for yourself and for your family when you get that diagnosis to go receive care wherever you choose and have the dollars available to not make that be the decision-making factor? Do I have the money available to go get care where I really want to get care? The likelihood of your client having to go out of network is increasing every day. And as we all know, if you go out of network, that just means more financial liability for the insured and their family. Again, these are all the things that we're not only protecting against, but where we talked about the preservation of wealth, but this is also the way to get them to a better, healthy recovery by giving them the options by having these dollars available. And the question that you can always leave them with is, how do you plan on paying for these additional expenses? How do you plan on taking care of not only the preservation of your financial plan, but getting yourself as healthy as possible? Do you have a plan? And where would you get those funds? And this begins your story into the conversation about critical illness insurance. With a critical care insurance policy, when clients get diagnosed with a qualifying illness, they can use the proceeds however they want. It's a lump sum payment given directly to the insured. It doesn't go to the provider of care. It doesn't coordinate with their major medical plan. It's just a lump sum face amount, very similar to the way life insurance works. There's a diagnosis of a condition, there's a claim filed, there's a check paid to the insured. They can do with those dollars whatever they want to do. They can use those dollars directly for the medical expenses that they're incurring. They can use them to continue to pay their monthly outlay, their mortgage, their car notes, their revolving debts, their fixed costs. They can use that money to do that. They can use it to continue to pay their premiums on their life insurance or save for their retirement. And they can use it to pay for those out-of-network costs in the event they choose to get care somewhere outside of where their major medical network is covering. Again, we talked about, the situation where somebody has major medical insurance, they get diagnosed with one of these conditions, and then they finally realize, okay, this is all my major medical plan covers. I still have to cover things like the deductibles, the co-pays, any policy exclusions like experimental treatment, or any out-of-network costs. And these things are all going to come up at a time when they really don't want to be making these financial decisions. The stress of the situation in general is hard enough, but now they've got to make monetary decisions as well. There's also the indirect cost, the loss of income, which disability income insurance may be in place or not. Will they have enough money from their disability income insurance to replace that lost income? Could they use some additional funds to make sure that their financial stability is still there? Lifestyle changes, things like needs for changes in their home modifications, things like that, or just need to maybe take a different type of job because the stress levels at their job just don't allow them to continue in that type of work now that they've been diagnosed with this type of condition. Can they afford to make those type of changes? Increased financial responsibility on the spouse, and this is a huge one. When one spouse gets sick, the other spouse now has to make up for that lost income, and they're also having to take care of their spouse and their families, and all the financial responsibility is now on one person. Having this plan in place helps to relieve some of that financial stress, and I say this all the time, and it's one of the things that I think is most important when you're talking to customers. You can't do anything about the emotional stress they're going through or the physical pain that they're going through, but we can at least help them relieve the financial stress. And if you can help them relieve one of those stresses, that conversation about how they can get better faster becomes a lot easier. And then things like transportation and lodging for non-local treatment. We're based here in Houston, Texas, which is one of the best cancer facilities in the world. There are so many people that come from so many places to get care in the city of Houston, Texas when they get diagnosed with cancers. If you live in a rural area or if you live in a town that does not have a facility that is known to be able to help people recover from a diagnosis like cancer. Wouldn't it be nice to have the lump sum dollars in your pocket to be able to say, we're going to go ahead and either myself and my family, we're going to go to Houston and we're going to have the dollars available to pay for the care, to pay for the transportation costs, to pay for the housing while we're there. And this is an opportunity, again, to protect your client against these situations and to give them the choices that they're looking for in the event they were diagnosed with one of these conditions. So we talked about the why, and I hope I gave you enough information as to why it's important to talk about this, why today is more important, and why it's different than it was maybe 5-10 years ago, why these type of conversations can be had a little bit easier. Now I want to talk a little bit more about prospects, and I've been talking about your current book of business a lot because I do think this product is a great cross-sell or upsell opportunity. It's an opportunity for you to go back to people who you've talked to in the past about other product and sold other product and say, hey, I think I may have left you with a hole in your financial plan. And I want to make sure we're talking about this to make sure you know you can protect yourself with a policy that would pay you a lump sum of cash in the event of a diagnosis of invasive cancer, heart attack, stroke, and several other conditions depending on which policy you choose. But I want to kind of help you target that focus even more and talk about some prospects now. There are a couple of target markets, and one thing about critical illness insurance is in the past, it really has been focused as a complement to disability income insurance or as a possible alternative to disability income insurance. So what you'll see is a lot of these target markets are going to be focused on that, but it doesn't mean that you have to be the one that sold them disability income insurance or that talked to them about it. It just means you have to know that this is the marketplace they're in, or this is a great opportunity to have that conversation. Individuals in blue-collar occupations in general, they typically don't qualify for disability income insurance. And although critical illness insurance doesn't pay in the event they have an accident, it does pay in the event that disability is directly related to a critical illness diagnosis. And then there are some things like paralysis that are covered by certain plans. So having a critical illness policy in place, it's not a replacement for DI, but is a good alternative for those who can't qualify for disability income insurance. So again, blue-collar occupations, great opportunity to talk about critical illness insurance and why it's important for them. High-wage earning professionals, and this is really important in situations where maybe they do have disability income insurance in place, but that 60% cap on their monthly income doesn't help them to continue to afford the lifestyle they live. Having a critical illness policy in place on top of their disability income not only gives them their monthly income from their disability policy, but it gives them a lump sum of cash to maybe make up the gap, make up the difference in that lost income. Or the other thing is if there's a high wage earning professional, maybe they're the only wage earner in that household. If they were to get sick, having a lump sum of cash will allow them to not have to have the spouse go to work. The spouse can still continue to stay home, take care of the home, take care of the family, and that cash will help them to keep them afloat until that high wage earning professional gets healthy again to go back to work. People with certain medical conditions like knee problems or situational depression, again, this is all about not being able to qualify for certain types of insurance. But if you have clients who you have relationships with and they've talked to you about these things in the past, maybe they don't even realize that they can't qualify for disability income insurance. But it's a great conversation to have about critical illness insurance. Here's an opportunity for you to present them with a product that they didn't know they could have, and it gives them a coverage in the event they get diagnosed with one of these conditions and are unable to work for whatever reason. Clients with life insurance coverage, I think, is probably a very similar conversation to one that you've had if you've ever taken any long-term care training. And the logic is very simple. If you have somebody who you care about enough to protect, then you'll want to hear about every opportunity you have to protect them. So it's a great opportunity to go to somebody who has bought life insurance because they now have a family, a mortgage, kids they want to make sure go to college, a spouse they want to make sure they take care of in the event they're not here. These are the type of people who are willing to hear the conversation and understand the value of insurance in general. And again, like I talked about before, it's an opportunity to go back to these people and say, I think we've left a hole in your financial plan. We've talked about what to do to protect you in the event of an untimely death. How are we protecting your family in the event you get diagnosed with a critical illness and survive? And I think that's a great opportunity. That's a great starting point for a conversation, for a cross-sell. And then you can talk further about what you need to do to protect them and protect them totally. Single working parents, I think, is another great opportunity as far as the target market is concerned. No family household will get disrupted more by a diagnosis of a critical illness like a single working parent household. Where are they going to find the dollars to not only continue to pay their monthly outlay, but also to take care of the children while they're recovering? Nothing can be more difficult than trying to figure out how to rush yourself back to work from a diagnosis so that you can keep your financial stability in your household and keep your family afloat. By protecting them with a critical illness policy, you're protecting not only the insured, but you're protecting their family and their household. You know, I've talked about these not eligible for disability income insurance, and we kind of hammer that thought out through here. But again, these are all great opportunities, and I'm not saying this because you're in the disability income marketplace, but because I'm sure if you look at your book of business, you know there are people who you have sold other products to that are in high-risk occupations, that have a family with a stay-at-home parent, that are small business owners. Small business owners almost always have already thought about the life insurance part of their plan. Very few small business owners have thought about what happens if I get severely sick but don't die. Great opportunity for you to go back to them and talk about the opportunity to protect themselves and their business with a critical illness plan. So we've talked about the why, we've talked about where you go with this type of policy. I'm going to spend a very little time today talking about the specifics of our plan. For those of you who are aware of our plan, it's called Critical Care Plus. It is a standalone critical illness policy. It does cover 12 conditions, and we'll talk about those conditions. I'm going to focus primarily on what you may have heard about other plans that are out there and why ours is different. Focus on some of the highlights of our product. Again, the overall thing is it's going to pay a lump sum benefit upon diagnosis of one of our covered conditions. We do offer coverage up to $500,000, which may be an industry leader. I don't know too many other carriers that issue up to $500,000. That doesn't necessarily mean you're going to sell a lot of $500,000 policies. In fact, when you look at the pricing on these policies, you're going to probably sell more policies at the range of about $50,000 to $75,000. But there are situations, especially in the small business market, key man coverage market, succession planning market, where you might need to issue up to $500,000, and it's good to know that there's a carrier out there that will go up to that size. Again, that payment is going to go immediately upon diagnosis to the insured. They file the claim. We're able to verify that they were diagnosed with one of the covered conditions. They're going to receive a lump sum check from American General. That payment is tax-free, and that's very important for your insureds to understand. And they have the freedom to use that payout as they need. It's going to pay in addition to any other insurance they have, including their major medical. We're not coordinating with that. And one of the things that is a key difference with American General is the loss of independent living benefit, which is one of our covered conditions, and we'll talk about that in a second. We've talked about the benefits of having a policy like this, and it's really about the freedom to choose where you get your care and the preservation of your financial plan while you're recovering from one of these diagnoses. As I said, we issue up to $500,000. We do have a minimum of $10,000 in most states. In certain states, the minimum is $25,000 in face. We do offer spousal coverage, and we do offer the ability to cover the children as well. We do have male-female rates, and we do also have tobacco and non-tobacco rates. One of the key things with American General that you'll notice if you're quoting our plan, we do 5-year age bands. So sometimes at age 40, you might see that we're not as competitive, but at age 44, we're either more competitive or maybe even the best priced out there. So because of that 5-year age band, sometimes we look a lot better and sometimes we look a lot worse when you're comparing the premiums to the competition. The other thing is we do have 3 rate bands, and unfortunately when they priced this product out, they didn't stop it at $49,000 and $99,000. So if you're looking for any price breaks, you want to issue a $51,000 policy or a $101,000 policy. Those price breaks are built into the pricing at those levels. So if you ever have a situation where somebody wants $100,000 in face, quote them $101,000 with American General to get that price break. We do have a benefit extension rider, a medical personnel HIV rider, an AD&D rider, and then we also have the ability to put you on the list for the major organ transplant. So I talked about our 12 qualifying conditions. You may hear other carriers say they've got 18 or 21 conditions, and so you think American General doesn't cover as much. But we do cover the major three: invasive cancer, heart attack, and stroke. We also cover renal failure, severe burn, stroke, coma, major organ transplant, paralysis, non-invasive cancer or cancer in situ, coronary artery bypass. But you see that one in the middle, loss of independent living. And basically, when you look at the carriers that have 18 or 21 conditions, most of the conditions that they list there are going to qualify under our loss of independent living: Alzheimer's, Parkinson's, MS, etc. These are going to be specifically listed out at other carriers, but with American General, it really is just the loss of 2 of the 6 ADLs. So as long as it's not one of the other 11 conditions, which would pay you out immediately, if you were to be diagnosed with something like dementia, for example, if that dementia led to the loss of 2 of the 6 ADLs, that would trigger a qualifying claim with American General. This is one of the few diagnoses that does have a elimination period. It's a 180-day elimination period. So if they had a $100,000 face policy with American General and were diagnosed with the loss of 2 of the 6 ADLs, it would be 180 days before they'd receive that $100,000 lump sum paycheck. But again, many of the conditions that are covered with other policies are going to be covered with American General under the loss of independent living. A couple of other key differences: we pay the full benefit of the face amount of the policy through age 70 on all 12 conditions. There's no reduction of the face amount at age 65 like some of the other policies that are out there. However, the major difference is after age 70, we only pay out on the loss of independent living. So if they were to have a stroke at age 75 and have a policy in place, they would not receive a payment. If that stroke led to the loss of independent living, then after the 180-day elimination period, because they now qualify for the loss of independent living, we pay the $100,000. Whereas if they were to have a policy with a different carrier who did a reduction of face at 65, at age 75, if they had a stroke, they would receive a $50,000 payment. So that's one of the key differences. It's a trade-off. I'm not sure which one is better or worse, but it is a key difference I want to make you aware of today. Again, some other key benefit features. We have a preventative care benefit, and we have a return of premium benefit. Now, I want to really explain the return of premium benefit because it's important, and I think it's a great distinction between our product and others. The way our return of premium works is the return of premium upon death. So in the event that someone were to have a policy in force and die from a condition other than one of our 12 covered conditions, the beneficiary would receive a full refund of all premiums paid into the policy. So let's talk about a scenario. An insured has a policy. They are diagnosed with a heart attack and survive. The face amount of that policy was $100,000. The insured would receive a check from American General for $100,000. Let's say the insured had a policy in force, $100,000 face. They had a heart attack and died. The beneficiary could file a claim on their behalf, and the beneficiary would receive a check for $100,000 because there was a qualifying diagnosis of heart attack. Even though the person did not survive it, they're still due the $100,000, and the claim would go to the beneficiary at $100,000. Let's say the insured had a policy in force of $100,000 face, but they died in a car accident, and the car accident had nothing to do with any of our covered conditions. The beneficiary would receive a full refund of all premiums paid into the policy, less any benefits that may have been paid out. So again, as long as this policy is in force at the time of death, either the payment is going to be triggered by the diagnosis of one of the covered conditions or the return of premium. And if the person is alive, of course, when they were diagnosed with one of the conditions, they would receive the full face amount of the policy unless it's one of the conditions that pays less than face. So the key is keep the policy in force, and something will be paid out on this policy, either at the time of death or at the time of diagnosis. And this is just some of the things that can be covered, but again, this is something that can be covered by any critical illness policy. The key is they now have a lump sum to pay for any out-of-pockets related to any of these things that may come up during the diagnosis. Another key difference, and I think this is the one that I'll focus on before we wrap this up, we offer term coverages. The reason being is because a lot of people will see the pricing on a lifetime plan, or maybe they don't like the idea of the fact that after age 70, the plan only covers loss of independent living. But they do see the value in having coverage, and they do think that there is a part of their financial future that they want to protect, whether it's the amount of time left on their mortgage, the amount of time till the kids go to college, etc. They might have an idea in mind. I really only need this type of coverage through age 65, through age 68, through age 70. We offer 10-year, 15-year, 20-year, and 30-year terms. What we've seen a lot of in recent days is a lot of 10 and 15-year term policies being quoted and sold, not only as a cost savings opportunity to the insured, but also as an opportunity to, like I said, find the need and sell based on the need. If the need is only, look, we just want to make sure that we have this policy in force until the kids go to college, then find a plan that makes sense for them as far as a term, and now you have the ability to protect that family at a lower rate and still give them the opportunity to get a lump sum of cash in the event they get diagnosed during that term. So an opportunity that not a lot of carriers afford out there. American General does offer that as an opportunity. Underwriting, very simply, American General under $100,000 is application and prescription check only. We don't really like to call it a simplified issue, but it pretty much is. It's an accept or reject basis, so there aren't any rate classes. In the event they have too many check marks on the knockout questions, they won't qualify for coverage. But just because they have 1 or 2 check marks on the questions doesn't mean they won't get issued coverage. If something comes back on the prescription check that doesn't match up with the answers that they put on the application, then we'll do some additional underwriting. Over $100,000, depending on the age and the face amount of the policy, we're going to do some additional underwriting, but it is fully underwritten over $100,000. And then I think the last thing I want to focus on before we end this call, it looks like we're getting closer to the time where we need to end, is how to build the best policy. And I think this is one thing that we don't focus on enough. We don't talk about the reason as to what you're selling, critical illness, and what you're trying to cover. Like I said, a lot of times the thought is, well, I just sold $1 million in life insurance, so I'm going to sell as much critical illness as possible. And then you run the quote and realize how expensive the policy is. What we really try to do is we try to make sure that we get an idea of, what is their disposable income, what is their monthly budget, and how can we protect them out of their monthly outlay. How long can we protect them with a critical illness policy to make sure that they have the time to recover and have the dollars available to make their monthly outlays there while they're recovering from the diagnosis. The typical recovery time is somewhere between 6 to 12 months. So that's a good place to start. A lot of times you might hear people say anywhere from 6 months to 24 months times their monthly outlay will help you build the best policy. And then there are other factors like are they single, are they a business owner, and if there are any additional needs. But as I said before, you're typically looking at an average policy size of somewhere between 50 and 75,000. That would typically get most families through this situation. Not only give them the dollars to make the choices about care, but also to give them the dollars to continue to pay some of their monthly outlay that they're going to be missing from the missed time from work or from the shortfall of their disability policy. So again, we talked about why critical illness is important today. We talked about who you should be talking to and why you have the opportunity to talk to some people whom you might already know. We talked a little bit about the product at American General, and I'd love to have some additional opportunity in the future with some of you individually to talk more in focus about our product and get more in the weeds about how our product works. And then we talked a little bit about how to build the best policy. With that, I'm going to go ahead and turn it back over to Dave. I just want to say again, Dave, thank you for the time. I hope this presentation was valuable to you guys, and I hope to see that you guys have some success with this product out there.
Hey, thanks, Paul. Great job. Our goal today was to tell you more about the why and the how versus the what. We think it's more important that you focus on just talking about this type of insurance with your clients. And the solution will follow on behind it very easily, but you'd be hard-pressed to ask anybody the question that, do you know anybody who's had a cancer, heart attack, or stroke? And I don't think you can have one person come back and say, no, I don't know anybody who's had cancer, heart attack, or stroke. It's an easy opener to a conversation, a very friendly conversation that you can have with your clients about getting this type of gap insurance in place to help protect their assets when they do get diagnosed with some form of a critical type illness. I'm going to start unmuting people here in just a second here. While I'm doing that, just another commercial for upcoming webinars. We've got a special session this Thursday on getting you prepped for Long-Term Care Awareness Month coming up in November. We have a Medicare supplement webinar coming up on Friday with United Healthcare, getting you all prepped up for the AEP starting next week. Next Tuesday, Paul's going to be joining me once again to talk about their personal accident insurance and how you can put that to your advantage as well. And then also about a couple of the different programs we have running right now. We have our fourth quarter television giveaway. We're giving away anywhere from a 40-inch to an 80-inch Samsung high-def resolution TV this fall based upon Mutual of Omaha business. We have one heck of a marketing program set up with Target Leads for direct mail, where you agents working with American Independent Marketing get $85 per thousand off the rack rate. And on the back end, as you sell products, whether it be MedSup, critical illness, final expense, or long-term care insurance, as a result of getting those leads, we will co-opt you and offset some of that ongoing marketing cost. So we're ready to make an investment in your practice if you're ready to make an investment in your own practice. So with that, I'd like to open it up to anybody who has any questions of either me and or Paul. Any questions on CI overall? Any questions about American General, AIG? Any questions about American Independent Marketing? Please fire away.
Can we get a copy of the slides from the presentation?
Yes, I'll get it from Paul, and I'll make sure everybody who's on the call gets a copy of it.
Thank you.
You're welcome. Again, keep in mind, this is a for agent use only PowerPoint presentation. It's not to be used with the general public.
I was thinking so.
Any other questions?
Hi, Dave. On that 180-day elimination period on the long-term care.
On the loss of independent living, yeah.
Yeah. Is there any kind of is that a once in a lifetime? Is there credit if other types of benefits are paid as far as days go, or is it just for that one particular item at the 180 period?
Paul, you want to take that one on?
Yeah. So the way our policy works is the base plan itself is a one-time payout unless it's one of our reduced face payouts like 25% for non-invasive cancer. So we'll go with the example of a $100,000 face policy. If they were to have a heart attack, they would receive $100,000 lump sum from American General, and their policy is no longer in force. So if there were any future diagnoses of anything else, they won't be able to file any more claims. With the loss of independent living, it's going to work the same way, except it's going to have a 180-day elimination period. So if they were to be diagnosed by their physician to have lost the ability to perform 2 of the 6 activities of daily living, that's when the clock would start. At the end of the 180 days, if they have a $100,000 face policy, they're going to receive a check for $100,000, and then that's the end of the policy. So it doesn't work from a payout standpoint any differently from any other of our other conditions, other than the fact that there's a 180-day elimination period.
But the obvious question is, do you have a heart attack or some other covered condition in that 180 days? Trump other, or?
Well, if they've already filed the claim for the loss of independent living, then we're basically that's the diagnosis that we're paying out on.
Okay.
Yeah. So, and again, it would also depend on their age, because of course after age 70 we're not paying on any of those other conditions anyway. It would be a rare situation where somebody would be age 60 years old, have a loss of independent living diagnosis, and then during that wait period have a stroke or a heart attack. Not saying that it couldn't happen, but if they've already filed a claim for loss of independent living, then we're basically on a wait for that claim to be filed. And I think anything else that would be diagnosed beyond in between that time would probably not be paid out.
Did that answer your question, Dennis?
It sure does.
Okay. Any other questions?
Same scenario. They filed a claim for independent living or can't do independent living, and they're waiting, and they have a stroke while they were waiting. And you're saying the stroke wouldn't trump the claim for the not able to do independent living. You would still wait the 180 days, and then they die after they've had the stroke.
I mean, we're talking about a very specific condition, and I can go back to our product and underwriting team just to verify. But you know, when a claim is begun on the loss of independent living, the clock starts. I don't see them saying, okay, now we're going to pull that claim request and.
If they did have a stroke and they did die from the stroke.
Yeah, well, you know, obviously we're going to run into a lot of unique type scenarios. What I'll do is I'll let Paul go off and talk to his claims department to see how they would handle a claim like that if someone has started the clock to set aside, you know, to claim against the loss of independent living, and say 3 months into it they were to have a stroke and pass away. What would the carrier do? I'll get that answer. And who is asking that question?
John Anderson.
All right, John, I'll follow back up with you if you don't mind.
Okay, that'd be fine. I'd appreciate that.
Okay. Any other questions? These are all good questions. Any other questions? Okay, if that's it, that's it. I appreciate everybody again taking the time to join me. Paul, thanks again. Wonderful job. We'll look forward to having you here again next week. And if you could go off and do a little bit of research on that one particular question and let me know, I'll follow back up with John Anderson.
I'll get you the answer shortly.
All right, cool. Thanks, everybody, again. Have a marvelous day, and we'll see you next time. Bye.
Thanks, Dave.
You're welcome.